think, act, and prosper. You are now tuned into the Money Level Show.
Hey Sean, how you doing today?
It's very nice to see you, Darrell. I'm doing very well indeed, thank you. How are you doing?
Doing good. We both started our weight loss journey.
Yeah, we
And
certainly have. Well, I'm looking forward to comparing notes when we meet up in Florida in a month's time.
yeah, for sure, for sure. I think it's important that health is part of wealth, right?
All right, too.
Yep. So a lot of excitement around uranium right now. I mean, especially news out of the U.S. The Russian uranium ban, that was something that was, pretty like we knew was coming down the pipeline. Based off some guests that I've had on my channel, there's been a lot of news around AI. Uh, Really, like you have these companies, Microsoft, Google, and Amazon, who are investing in nuclear energy. They're seeing like, hey, we need clean power and we need baseload power, and so which is driving a lot of demand for these AI companies that are bringing in massive amounts of money because of this technology and its development. So, what are you seeing there? What are you seeing in terms of like the sentiment around nuclear and uranium?
Look, I mean, 100%. I agree with everything you said there, and I'm really interested that you particularly pointed out the technology companies and the AI and so on, because we talk a lot about the energy transition, and of course that's what Power Metal is all about in terms of the commodity set that we have. And a lot of people think of that very much in terms of electric vehicles and powering your home and the electricity grid and so forth, in the context that we already understand our lives. In other words, I take my current life and my current sort of fuel consumption, if you will, and I replace that with clean energy, and that's great, and that's obviously happening, and that's easy to understand and is extremely important. But there's a demand shock on top of that, which is the new technologies that you've alluded to there, which have huge demands for power and for electricity. But those providers, those data providers, and those technology companies, quite obviously want that power to be clean, and they need it to be generated on a sustainable basis. Now, I'm sure we can all debate the energy mix for forever and ever, but I think it's becoming, certainly from my perspective, very much a mainstream argument now that nuclear forms a very, very important part of that mix. And obviously the corollary of that is uranium as the fuel source. So that's why we invested very heavily in our uranium portfolio a few years ago. My predecessor, Paul Johnson, when the uranium price was about a third of what it is now, staked out a major license area in the Athabasca Basin in Canada, in Saskatchewan, around about 1,000 square kilometers of a whole bunch of different licenses, under which we've taken some early stage exploration. We've done a little bit of field work. We've done some soil sampling and some magnetics and all the sort of geophysical things that you do. And we've made a lot of progress. I mean, people will have heard that we found a major helium anomaly, for example, in one of our properties. And I think we've talked a bit about this before. That the uranium portfolio has been a very big part of what we do. But what's happened since we last spoke and what we've announced this week is a major transaction covering our entire uranium portfolio with a globally strategic investor who is taking a 70% stake in our 100%, currently 100% owned subsidiary, Power Canada, which contains that uranium license portfolio, and is injecting 10 million pounds sterling into an exploration program to really get started properly on exploration drilling in that area. So this is really exciting for us. It crystallizes a lot of value for Power Metal shareholders, but it also, with that level of capital investment, substantially enhances the opportunity for commercial discovery. So I'm really excited to be on today to talk to you and to talk to your listeners and your viewers about this deal. It's a major step change for us, and we hope that it really interests people and that they'll come and see our information and learn more about Power Metals on the back of it.
Yeah, for sure, for sure. So, I mean, obviously for a global investor to come in and invest that amount of money into the project, it's like that's significant, right? And so, what were some of the things that they saw in Power Metals and that portfolio that really grabbed their attention? Saying like, hey, this is something that we should deploy this amount of capital towards.
So principally the address. Okay, the Athabasca Basin in Saskatchewan is the world's #1 address for uranium exploration. Okay, so you've got Cameco, you've got Cigar Lake, and all these sort of major assets that are in that area, and it's a well-established uranium territory. Now we won't go through necessarily the whole portfolio because it'll take a long time, but we've got a bunch of properties that are within the Athabasca Basin itself. There are some that are on the outskirts of it. All with, not all, but many of which have different geological settings and formations and different levels of prospectivity. So you've got a very kind of blended bet, if you like, very different sort of geologies, and you've got with a big license area, a lot of different opportunities to make a discovery. Now, what this investor has concluded is, look, we want to make a big investment in uranium because we are very interested in this, particularly this sort of AI technology-driven demand shock in electricity. So that's what's moved us towards nuclear and uranium. So that's point #1. But then how do I invest in that? So I could buy, for example, uranium ETFs, and I know they'll be extremely popular with your listeners. I'm sure a lot of people will be invested in those. A lot of those list in Canada. So I could buy that. I could buy companies like NextGen, for example. I could buy other perhaps more established explorers that are already listed. Or in this case, I could look at what is currently a privately held portfolio where there is enormous upside potentially from making exploration. So this is valued, relatively modestly. It's not currently quoted. We have done some work, as I've said, but this is not by any means a sort of an advanced or developed set of projects. So we get in at a very early stage. And that's really where, and as with all exploration, really across commodities, it's the earliest stage where there is the most upside. Now, naturally, there's also the most risk, of course. So you're mitigating that risk across the entire license package. So as I say, you've got a portfolio of risk. You've got the early stage. You've got the upside from discovery, and I think that we've got with this investor bringing the capital, with our expertise in our team to actually undertake the exploration work, with our knowledge of exploration and of uranium exploration in particular, I think those two things combined give us a great chance. Because it's important to remember that when you look at an exploration company or a mining opportunity, and there's a whole lot of factors that you look for. That is the geology, the geological setting. You want to know about the geophysical results that would indicate a drill target. You want to know about the drill results, the assays. You want to know all of these things. They build up the picture. You want to be close to another asset that's already been perhaps discovered or in production. And those are all important factors. But there's one really, really important factor that if you want to make a discovery, and that is having enough cash to get there. Right? Drill programs are expensive. A lot of companies fail, not because they haven't got the geology and the information and the setting and everything else, but because they don't have the financing to undertake a program of sufficient scale to make the discovery. If you try and do these things on a shoestring, you will struggle, and you will increase the amount of luck that you need. The more you can invest in it, the more widespread and detailed and so on you can make your exploration program, the better chance you have of success. So cash is an incredibly important element. So what we're saying to Power Metals shareholders is, look, you will own, as a consequence, if this transaction completes. So I should, by the way, say that we've entered into a proposal to form a joint venture. Nothing has been finally completed. It's important to be clear about that. There is always a possibility that deals don't get over the line, but we have signed a term sheet, a non-binding term sheet. We've entered into a period of exclusivity under which they will do due diligence, and we will form the joint venture, and the deal will complete. Assuming that all those things happen, we will get started on exploration. And with those factors that I've talked about, we've got a really fantastic chance. And for Power Metal shareholders, we will, on completion, you will have 30% of what's called now Power Canada. We'll probably rename it, but at the moment it's Power Canada. The investor will have 70%, but you will have effectively 30% of all the upside, but you will have 0% of the exploration cost. Okay, so one of the problems you will have if you own a mining company, an exploration company, is right. Here's my opportunity, but now I need you to come and give me some more cash to pay for it, and then you probably need some more, and then some more on top of that. In this case, the investor here is going to fund the exploration. We're going to operate it. We're going to bring our technology and expertise and so on. The Power Metal shareholder gets none of that cost, but he gets 30% of all the upside. So it's a fantastic deal for our shareholders and a really great validation of our business model and what it is that we do. So, I think we've said before on interviews, we don't actually mine anything, and we may never actually mine anything. We explore for things. We establish a resource, and then we seek to monetize the value that we've created by doing that in a transaction of this kind. Now, sometimes that's a public market IPO, as we saw with Golden Metal, which has performed extremely well since it listed and is about half of our value at the current time in terms of market cap. Or in this particular case, a special purpose vehicle, a joint venture, which will in turn have its monetization event. Now, whether that's via an IPO, whether it's via a sale to another company or some other form of crystallization, we don't yet know. It's early days. Let's wait till make a discovery first. But there will be an opportunity for Power Metal shareholders to, we've established some value for you today, or rather on Monday. But then when we make the discovery and then when we monetize that, there'll be another crystallization event. So, if you stick with the share, I think you should do very well.
Yeah, for sure. Yeah, I appreciate you being transparent about that too. And because some people may, when they're engaging with companies that dabble or explore companies, they kind of, some people are like, oh, bet the house. Some people are just like, very hesitant, and so appreciate your transparency just with us. And so I think that this is like very important because like, I've been to, these conferences at, like the Rick Rule Symposium, New Orleans and such. And one of the fears is like, okay, is this company solid? Does this company have the cash to get this actual program, get this actual project off the ground? And so that's like one of the biggest things. I mean, and you just mentioned that, like, you can have this land, you can have this project, but how are you going to get the funding for the project to get started, to start drilling, the feasibility studies, all of those different things, sampling and all the different nuances that go in it. And so that's very important. And you're not having to pass that on to the shareholders by issuing more shares and such. Like that's because when you issue more shares, it drives the price down and shareholders have to fund the project themselves. So that's just providing a lot of value within itself. It minimizes the risk as well as, it increases the upside potential. Time out. Quick break in the action. This message is brought to you by the Rule Symposium. This annual symposium is hosted by the legendary investor Rick Rule himself. It will take place from July 7th through 11th in Boca Raton, Florida. Mr. Rule invites some of the most brilliant minds in macroeconomics and natural resource investing. This year, featured speakers include Danielle DiMartino Booth, Nomi Prinz, Jim Rickards, Grant Williams, Lobo Tigre, and more. Rick even organizes the Living Legends panel where he invites individuals who have built billion-dollar businesses from scratch. Attendees will be introduced to a myriad of companies active in the natural resources space, with the companies invited being the ones that Rick Rule invests in himself. The symposium is held at the Boca Raton, which is an amazing resort with exceptional amenities. I attended in 2023 and thoroughly enjoyed my time there. I went on an amazing cruise with Rick and other investors and CEOs of companies, and even had the opportunity to test drive an Aston Martin for the first time. So don't miss out on this opportunity to have fun and receive high quality education to help secure your financial future. Click the link below to sign up, and I promise you won't regret it. But if you do, Rick offers an amazing money back guarantee. So what are you waiting for? Click the link below to sign up today. Now, without further ado, let's get back to the content.
Yeah, no, that's right. And look, you've hit on a really important point there, and it's something I really want to just sort of echo and emphasize a bit, is this point about dilution. Because look, in an ordinary market, or God willing, a bull market, of course, the contract's reasonably simple, which is that you give me cash, I deploy it, I turn it into more cash, and I return it to you either via a higher share price or some other form. So it's a pretty easy deal. However, these markets are difficult. The cost of capital is very high. It's scarce. In fact, I think a lot of the capital that we have historically enjoyed in our sector has gone, and perhaps for good. We've talked, I think you and I before, about crypto and cannabis and these other sort of risky areas where a lot of the risk capital that would have been in exploration before is now more broadly spread. And I think we talked about this, didn't we, in New Orleans? Brian London gave a very good talk about it. And it's a very big issue. So companies have got to be extremely careful about issuing more stock, essentially, for these activities, with no real prospect necessarily of making a return in the short term. And you also have to get paid a salary and so on. You need working capital. So if you're constantly going to the market for more money and more money and more money, you're building up obviously a huge amount of shares. It's very difficult for the shares to perform in that context, because you're wading through warrants and all these kinds of things. Now, in a bull market, no problem, everyone gets excited. We saw this during the COVID period. You can list anything, everything's great. The current environment, which I think is improving, but it's still quite tough, I think, this is slightly special pleading, but I think where quality companies, not just in terms of assets, but in terms of their attitude to capital management, should ultimately succeed and win out at the end of the day. So what we're trying to do is to minimize, as much as we can, dilutive equity raises. So, for example, as part of this deal, the bit we've already executed is a loan note with the same investor who's invested £2 million in Power via a loan note, where we have the option to pay the interest back in shares. We can pay the principal back through other means, through asset disposals or whatever. But he's helping us to meet the costs of the IPO that we're now not going to do in uranium, which we can talk about, but is not particularly relevant here. Other corporate costs, bit of working capital, but that's not diluted our shareholders. And so really looking at capital structure and maximizing and optimizing the capital structure is as important to the shareholder and to the share price as the actual operations of the business and the assets that we look to employ. And I think this is why Rick Rule is a supporter of ours, because what he identifies, and he talks about it, the mining merchant bank model. You're a merchant bank in natural resources. Is you're taking this merchant banking model where you're investing yours and your investors' capital, and you're making returns, but fundamentally it's about the capital structure of the business, the monetization of the assets, the recycling of that capital, and all the things you're trying to do is optimizing the returns. So you're not just constantly bleeding out more and more shares, and then never getting your head above water, if you understand my meaning. So, it's an important point you make, and I think something that I would really want to emphasize when we talk about the shares, we market the shares to investors, particularly in the US, where I think the incubator model that we have is very well understood. That it's really important to get this point across, that if you invest in Power Metals, we will. I'm never going to say we're never going to issue stock. Obviously, I mean we will, but we will as much as we can minimize the amount of dilution that you suffer. We seek to make very good returns on the capital that shareholders invest, or the primary equity that you invest, and through our portfolio management, our investment banking model, if you like, we're always seeking to optimize the capital structure and those returns. So gold metal has been a great example where we've incubated some assets, we've listed them on the market, we've retained a large shareholding, and it's performed extremely well and has created a lot of value for us. This uranium deal, I'm absolutely convinced, if it executes as we expect it to do, we'll do exactly the same. So, you want to come on board as a shareholder, what can I expect? I would say more of that. More gold and metals, more uranium deals. We've got assets all around the world. We've got great assets in Africa, in Botswana. We've started picking up assets in Saudi Arabia. We're going to be doing a lot more there. It's going to be a big focus for us. We have great assets in Australia. So, as people, and of course, in gold and metal in Nevada, of course, in the US, in your home territory. So, there's some really high quality assets in safe jurisdictions where we understand the markets we're dealing in. We understand the capital structure that we need to maximize those opportunities. We have the geological expertise and experience. I mean, I've got, 4 geologists between them. I've got, I think it's like 70 years experience between them. They've made a discovery in every continent and every commodity you can think of. We've got a really first-class team. We use lots of consultants and contractors as we need them, so we keep costs low. And, as this market starts to recover and frankly, very, very difficult conditions that all companies in our sector have suffered, I think we will start to perform in the eyes of shareholders. I think we will start to perform extremely well.
That's good. That's good. Thank you for that update, Sean. And I mean, it just seems like a lot of great things. I believe in Power Metals. Always enjoy engaging with you all. Y'all are one of the the most authentic companies that I've met at some of these conferences and such. And so definitely appreciate you. So where can people find more about you? You're on the OTC. You also have a website, a Twitter account. Where can people find you?
That's right. So we are, thanks for pointing that out. We are on US OTC, and I think we talked about that in our last conversation. That's a really important development for us. It's very important, all the things I've just said about, we're very good at managing capital. That's all great. But if you make it difficult for people to buy the shares, you're going to get nowhere. As we've always said, I think you and I joked about when we met, there's a difference between great companies that fulfill their objectives and so on, and companies whose shares go up. The companies whose shares go up are ones where investors can actually get involved, get information, get on the exchange, buy the shares. So we've made it as easy as we can by getting an OTC listing. We've got, you mentioned Twitter, we've got social media channels. We do a lot of interviews across all, and we go on all of those channels. So you can find us on YouTube, you can find us on Twitter. You can email us at info@Power Metal Resources. Those emails come to our IR department and then they come to me. We're very happy always to engage personally, one-on-one with investors. If anyone has any specific questions, I really lead the investor relations function from a kind of public sense. So if you want to engage and you want to talk about the strategy, what are we doing, what am I expecting for this company, please get in touch, and I will very happily personally engage with any investor or current shareholder who wants to talk. It's extremely important that we engage honestly, transparently with investors, that we produce timely information, that we keep people informed, and that we allow people the opportunity to value the business. It's quite a complex business, Power. There's lots of bits. And, people say, well, okay, well, half of your value is gold and metal, that's fine. The other half of your value is this uranium thing. So, okay, everything else is free. Okay, I see that. But what is everything else? How do I value that? And that's what we're going to be working on. We're going to be talking about in Florida. It's going to be how to value the portfolio and how we can clearly read across the sort of collection of assets that you've got, come up with a valuation number, and then decide if the shares are cheap or expensive. And I think you'll conclude that they're very cheap. So we're going to talk about that, I think, when I see you, and hopefully we can have another chat and fill that in a little bit more.
Yeah, for sure. All right, you all, be sure to go check out Power Metals. I will be sure to leave the links in the description below, as well as the OTC ticker. This is not financial advice. However, just want to make sure that you all have access to it. Thank you, Sean, for coming on.
Thanks very much. I'd love to see you.